Welcome to our podcast. This is Friends on Fire.
I'm Mike. I'm a lifelong devotee of financial independence. I even wrote a book about it.
And I'm Maggie, a newer convert, but just as passionate, especially on the intersection of minimalism and financial independence.
We're one and the same.
We are two like-minded friends who believe that talking about money with your friends and family opens the door to financial well-being.
The Friends on Fire podcast is about dispelling myths, building financial acumen, and sharing your financial independence journey with the people you care about.
This is Friends on Fire. Hey, Maggie.
Hey, Mike.
How's it going?
You know, it's good. It's been a long week.
But at least we get to talk about something fun today.
Medical insurance.
Everybody's favorite topic.
It's right up there with 401k and DCPs and DSA. I'm making up acronyms. FSAs, ABQs.
But this one is sort of timely because we are getting into benefit enrollment season at most companies. Hopefully this will be useful for people. It's certainly a question that we get a lot from our peers at work because it's super confusing no matter what company you work for.
Hey, Mike, before we jump in, Can I read a piece of fan mail to you?
Yeah, absolutely. Let's do it.
Okay. So we got, and I'm calling it fan mail because the subject line was literally fan mail. And when I saw it, it arrived about a week and a half ago. I'm trying to see what time it arrived, but it arrived like late at night and I had a really long day and I was just sort of exhausted by many things in the world and in life. And I was like, oh, this note made me really happy. And just, you know, when like you need kind of a recharge or a little bit of a reminder why you're spending time on certain things and all that. So anyways, the message is, I'm just going to paraphrase some points from it, but it was a very nice piece of fan mail from one of our listeners. And she said, I think I'm your biggest fan. She found us through Mark Horstman, which is the Manager Tools founder that we did an interview with in the sort of mentor series. And she said, your podcast has majorly improved my life. And I'm about to detail all the reasons why in a rambly way. Probably only Maggie will appreciate. Mike, I left a TLDR for you at the bottom, which I loved that she caught on to both of those angles. And so she went on to say, like, I'm just going to paraphrase some stuff, but since listening to your podcast in March, I've started tracking my net worth, started tracking my monthly spend through your spreadsheet, started a Wealthfront account, read Your Money or Your Life, Essentialism and Designing Your Life. And she just bought your book, Mike.
Thank you.
And she saved the best for last, right?
Right.
And then she said, I'm now on track to max out my 401k, an IRA, and based on your most recent podcast, I'm thinking of starting an FSA. I would definitely love a podcast on how to choose a healthcare plan, by the way, which is perfect since we teased that we might do that, and now we're doing it. So I love when all the stars align. Then she froze her credit, said, thanks, Mike. She just said, you two have really helped me get through the quarantine. The Friends on Fire podcast was the only way I could motivate myself. And she just had a lot of really nice things to say. And I'll quit reading. There was a little bit more in there, but I just want to say thank you. I don't want to name the person who sent it, but thank you to the person who sent this because it means so much to us. And it is, again, we've said it a million times. It's why we're doing this. We enjoy doing it. It's a passion for us. It's a, passion, hobby, whatever you want to call it. But we legitimately enjoy helping other people on their journeys and inspiring other people's journeys because we know how much this has been an important part of our lives. And yeah, I guess that's it. Anything you want to add, Mike?
That was a very sweet note. Yes, thank you for sending it. And while I appreciate the TLDR notes at the bottom, I also read the entire thing. So I appreciate all the detail. That was a great letter.
You don't require brevity in fan mail.
That's right.
You just require brevity when someone's like asking you for approval on something at work or.
No, it's really just with your emails because you include so much unnecessary background and detail. I'm just like, Maggie, what is your point here?
Yeah, I'm like, well, look, hey, it's Tuesday. So let me tell you what I normally do on Tuesday. And then 20 minutes later, I'm like, can you approve this, invoice?
If you even get to that point. Most of the times you talk yourself into something. And I don't even know what the point of your letter is.
And then I'm like, never mind. Hope you're having a good Tuesday. See you later.
But this letter had a purpose. She outlined what
It
she
had
was going to
bullets.
say.
It had numbers. It
Yep.
was organized.
Yeah.
Right.
It was great. And it
lovely written
made us
email.
feel good. So
It made me feel good. Yeah. So huge shout out to our self-proclaimed biggest fan. We appreciate you and everybody else who's listening.
yes. And if you want to send us fan letters, by all means, makes our day.
Yeah. We'll send you back a sticker too. You don't even have to send us fan mail. I put this on Instagram all the time, by the way. But if anybody wants a Friends on Fire sticker, just email, DM, however you'd like us, your mailing address, and we are happy to send you one. Okay. Let's get back to medical benefits, Mike.
All right. So, as I mentioned at the very beginning, we are about to enter the fall company benefits enrollment period. This is when you get to choose your 401k, choose your health savings account, your medical benefits, your vision, your dental, all that stuff typically takes place in the fall. It's pretty complicated. It's never very intuitive. And there are so many damn options that I think people just gravitate towards something that sounds nice or something that lets them complete the process. But most people go through this without really understanding what they're choosing.
It's also extra complicated because it's not like it's something you can call up your friends to discuss. You can discuss it with your other coworkers, but every single company is so different. Even the plans that they'll have, you might both have a Cigna plan, but each Cigna plan is totally different. They're kind of customized to like what was negotiated with your company in that benefits package. So It's hard to compare, which makes it even more difficult.
Oh yeah, that's a great point.
Though, Mike, I will give you a huge shout out because one of the many awesome things that you have done at work for my team and for some other teams is as just because you're a nice guy, you spent a ridiculous amount of time. Well, I don't know about a ridiculous amount of time. It probably took you like 30 minutes, but it was a pretty impressive spreadsheet where you actually took our company's exact plans and created this really cool spreadsheet that let you like put in all these different pieces of information about like how much you would typically spend. And it did some auto calculations to show you basically like which plan might be best for you to help kind of guide you. And I thought that was so cool that you did that. And, at some point people could try to put together something like that themselves. It's super complicated. I wish we could create one sheet for everybody, but unfortunately every companies are totally different.
Well, I'm glad you appreciated it. And I think I'm actually glad you brought that up because it did take me quite a bit of time. And I had help from somebody else. And
Hey, what is quite a bit of time? Because one time, remember recently when you were like, you had to fix something in some spreadsheet and you were like, I wanted you to change something. And you were like, this is such a pain in the butt. But you sent it back to me 10 minutes later. And I was like, well, it couldn't have been that hard because it took you 9 minutes.
It wasn't time consuming. It was just very challenging intellectually to figure out the mechanics.
But
don't get me off track.
9 minutes of challenge. It was like your idea of challenging intellectually was you literally replied to me 9 minutes later with the updated file and was like, this was so hard.
It was challenging in that I had to pause and think about it instead of just doing it second nature.
In your sleep.
But the medical benefits model that I built, I had somebody help me with it. And it did take us both a few hours of building and research. And the woman who helped me with it was somebody who works at our company that I had worked with at my previous company, an insurance company. And she's an actuary, has a master's degree in mathematics. And it both took us a long time to get this done. This stuff is complicated.
Yeah. So I take back what I said about putting together your own spreadsheet because unless you have a buddy who used to be an actuary and wants to spend hours digging through the fine print of your company's benefits, there's some general guidelines that we'll walk through today that will help you make an informed and smart decision on what benefit packages to choose that are best for you and your family.
That's right. We're going to try to simplify this a little bit. So to get started, if you haven't listened to our episode on car insurance, I would recommend that you do that because a lot of the principles about insurance are the same. Most insurance products are the same and the key principles by which you choose them are going to be similar.
Yep. And that episode, Mike, was episode number 10 and it's called Car Insurance is Just as Bad. In case the name is confusing, it's because number 10 was called Cars Are the Worst.
That was a fun episode.
But moving on.
So before we get into the specifics about medical insurance, here's some key facts to keep in mind about insurance in general. Insurance companies make money by paying out less in benefits than they take in fees.
Yeah, they are a for-profit business, right? They're trying to make money off of you.
Right. They are not your friend. They are not your good neighbor. They are trying to make money off you. And in most cases, they will give you less than you give them. Just keep that in mind. So over your life, this means you're going to pay a lot more for your insurance policies than you're going to get in benefits. And probably it's going to be a lot more, like tens of thousands or hundreds of thousands of dollars in insurance premiums, more than you get back in benefits.
And when you say tens of thousands, hundreds of thousands, that's over the course of many years.
Yeah,
usually.
over the course of your life, medical, home, all your insurance policies, these things add up. Medical being like the biggest and most noticeable one.
I used to, when I was younger, Mike, I would constantly just pick the like Mercedes of insurance plans, like the best plan. And it took me a while to realize that for, 10 years of that, I was like, I was spending, I probably spent 60 grand on insurance I did not need during the healthiest years of my life.
Yeah, that's absolutely right. And they probably had plan names like Platinum and Diamond and things like that.
And I was like, I deserve the Platinum plan.
That's exactly
I'm
right.
young. I got a job. I'm going to,
right.
get the best insurance money can buy. I'm going to throw the best money I can down the toilet.
That's right. So when you're choosing any insurance plan, you need to identify where you are likely to incur a loss or where it is the most risky that you will incur a catastrophic loss, and choose your insurance wisely for that. Don't just throw money away on meaningless little things where you might only get a $50 benefit. Don't worry about that sort of stuff. You want to protect yourself against the big things, like your house burning down, you needing a heart transplant. Do they even do heart transplants? Is that a thing? I would imagine it's expensive.
Oh, insurance. Yeah.
Yeah.
You mean like people have them? Yes. Does insurance cover them?
Probably.
I'm sure they do.
They're probably hundreds of thousands of dollars. I was asking just, in general. I said heart transplant as though like I've known somebody who's done that, and I just didn't know that's real. Okay. So
actually, I have no idea. I was thinking like heart surgery.
Yeah,
I guess
heart
you can
bypass
get a new
surgery. Anyway, we're getting off topic.
A liver. We'll do a whole future episode.
Yeah,
we'll do a future episode on heart transplants.
Yeah, good. Okay, so those are the keys for all insurance, but keep that in mind as we're talking through some of these specifics. The way insurance works, it's called a loss calculation. So insurance companies charge you a premium so that they can cover their fees, but then also cover their quote unquote losses. And losses is what they have to pay out in benefits. So an example of this is, let's say 1% of all of the customers are likely to have a heart attack. So 100 customers, statistically one is going to have a heart attack every year. And that heart attack costs $50,000. That's what the insurance company has to pay out. So you multiply those two, which means that the insurance company needs to collect $500 per person to cover those expenses.
And this is what an actuary does, all these calculations?
Mm-hmm. The actuaries will calculate that statistical likelihood of that 1% in this example. And then they'll also calculate what those costs are and do these calculations to figure out what loss costs are predicted and how much they need to charge customers. So very complicated work. Not for me, but, people love it who work in it.
Some people.
Yeah, some people do.
Those people.
Yeah.
The people working there.
The woman who left the insurance company to come work at our company, she did not love it as much, but she's very good at it. So this is generally how your premiums are calculated. So when you're being charged $100 a paycheck for your medical plan, this is basically what's happening. They take the statistical likelihood of all of these things happening, you breaking your arm and you needing heart bypass surgery and you needing your allergy medication, and multiply it out by the cost of those things. And that's how much everybody has to pay.
Okay. That was exciting.
Sounds so thrilled. All right, this is not the most thrilling stuff. I understand. I
think that's important. Yeah. So keep walking through before we get into like how to choose, walk through the kind of primary mechanisms of insurance or the mechanics.
Yeah. So when you are choosing a plan, you're going to have a bunch of different variables, and you might have 3 or 5 or 15 plans to choose from, but they're all going to kind of operate the same. The numbers are going to be different, but are going to have the same primary factors in them. The first is the premium. This is how much you pay per period to the insurance company just for the privilege of being covered. Then you have the deductible, which is the minimum cost that you need to cover yourself before you start to receive a benefit. So we just had our HSA episode and FSA episode. So this is high deductible, low deductible plans. Deductibles are going to be in the thousands of dollars no matter what type of plan you choose. So you will need to cover those expenses before you start to receive a benefit. Number 3, coinsurance. This is the percentage of expenses covered after you meet the deductible. And this gets confusing for people because you're going to have a variety of plans. And then after you meet your deductible, some might cover 75% or 90% or 100%. It varies and you need to pay attention to it. And then the last factor is the out-of-pocket maximum. This is the cost ceiling that a customer won't pay more than. This is also important because if you end up needing heart bypass surgery and it costs, honestly, I have no idea, $200,000, you would want to know that you're not going to pay more than $15,000 total over the course of that year, regardless of how much you incur.
Worst case scenario. Yeah, I think that's an important number. The other thing, Mike, that I think is important for people, or maybe not important, interesting for people to realize and understand is your company is also paying a premium that often you don't see. So you have the premium that you're responsible for, but there's a big chunk that your company is paying on your behalf that is one of the many benefits that they offer to you. And so I'm sure I guess there could be some small companies that don't pay the portion on behalf of their employees, but most companies, they're paying a pretty big chunk, often a larger premium than you're paying to make you insurable. And so the insurance company is getting your money and your piece of the premium, and then they're getting the amount that your company is paying on your behalf directly to them.
Yeah, that's a great point. And one of the things that comes up in the fire community a lot is what you do about medical insurance. And I think that's a big point of confusion for people who aren't involved in that world, because they're like, well, what would you do for insurance? You can get insurance directly from Cigna or Blue Cross or any of those things. It's just more expensive. And to your point, the company benefit is that while you pay maybe $100 per paycheck, your company pays $200 per paycheck on your behalf. If you aren't employed, you would just go to Blue Cross and pay that difference. This is an oversimplification. You could go buy a similar plan and you would just pay more for it. Understand that that's what your company is doing on your behalf, not that you can't get insurance on your own.
Yeah, and I think a lot of people often think the price difference of buying it on your own versus through your company is so massively different. It's honestly not even that different at times. It's right. Because your company is paying so much of that premium that you don't even see happening.
Yeah. So the meat of this topic is, how do you choose the plan that's right for you?
Yes. When you receive that piece of mail from your company that is like a 50-page brochure, or sometimes it's like an oversimplified 1-page brochure of a bunch of people like smiling at the dentist.
Right. Do you want the bronze, silver, or gold plan?
Yeah. It can sometimes be hard to work through it. So that's what we want to talk through is like, how do you choose the plan that's right for you? How do you get enough insurance, but not too much, and, find that sweet spot?
Now, spoiler alert, there is no silver bullet here. And so you will have to do some research, and hopefully the intro we gave to this episode, you will understand what you're looking for. But this stuff is so nuanced and so specific to what's being offered to you that there is just no one way to provide advice that's going to apply to everybody. So we're going to do our best to give you some ground rules.
One tip though, Mike, just before we even jump into the specifics for everybody, is you can talk to other employees at your company. So similar to the concept of Friends on Fire, that we believe that friends should talk about money, there's nothing taboo about talking about your medical insurance, or which dental plan did you choose? Which medical insurance plan do you choose and why? That's something you should ask the people that you're closer with at work, even the people you're not, right? Like bring it up at a team meeting. Be like, hey, do you guys want to talk about what we're choosing and how we're deciding, right? That could be a discussion that you have, because it will help all of you get better and smarter. You could recommend this episode to your friends at work too. That'd be a great thing to do.
But I will warn you, if you work with let's say a younger Maggie type who says, I chose the platinum plan because I'm worth it, you might want to find somebody who's done a little more research and get their advice.
Or help educate that younger Maggie on why they may not need the platinum plan.
Yeah, that's right.
That's why friends talking about financial topics is a great thing.
All right. So first thing you need to understand is that if you choose a plan with a higher premium, so if you pay more per paycheck, you're going to get a lower deductible, which means you need to spend less out of pocket to start receiving your benefit. If you choose a lower premium plan, so instead of paying $100 a paycheck, you pay $50 a paycheck, your deductible will be higher. Now, if you do incur medical expenses in the year, like you break your arm and you go to the hospital, both of those plans are going to cost you about the same, because you will either have paid more in your paycheck and then you are required to pay less out of pocket, or you'd pay less in your paycheck and you pay more out of pocket directly to the hospital. But the numbers are going to come out to be the same typically, because that's what insurance companies are designed to do. They want to recover the same amount of cost from every single customer.
That's interesting. At times when I hear you explain that, Mike, which I hadn't really thought about, I almost don't know what to do with that piece of information other than know that I just hope I don't break my arm, right? If I choose the, high deductible plan with a lower premium, I'm doing that because I'm thinking like, well, I'm kind of not gambling, but I'm placing my bets here on I'm not going to have any big expensive injuries. And maybe I will once in 5 years, but if I do 5 years of that plan, hopefully it'll work out for me.
So let me break it down a little bit further. So you said making a bet. If you believe that you are healthy and you are unlikely to incur very much, if any, medical expenses, you are always going to be better off choosing the lowest premium plan. You just pay less for your policy and then you never really use it. If you break your arm and you incur a big expense, that is the situation where the plans will roughly be the same cost to you no matter what you've chosen. Okay? Does that make sense?
Yes.
So if you are healthy and you don't think you're going to have $10,000 of medical expenses in the year, the lower premium plan always going to be your most cost-effective option.
And remember, this isn't just you. This is whoever's on your plan. So if you have a partner or a spouse or someone on your plan.
Yeah, just somebody who's on your plan. Yeah, you can't add just anybody to your plan.
Yeah, random people. But whoever else is on your plan, whether it is children, a partner, spouse, etc., you obviously want to be thinking about everyone's situation, right? Mm-hmm. And so we'll talk about that more in a bit of kind of thinking about that piece. But
if you have an entire family on a plan and you know that one has a chronic condition which requires routine visits, regular medication, perhaps procedures, and you know these things are going to occur, that's when you can spend a little time forecasting and understand like what your costs might be in order to pick the specific plan which is going to be a little bit more cost effective. It's probably not going to be a big difference in total cost, but you can find a sweet spot for a better plan.
You also, since we're talking about it now, you also can be very strategic in how you divide up your family on different plans, right? So most companies charge a pretty large, is it called a surcharge or an extra fee for you to put a spouse if your spouse is employed. It's like if your spouse isn't employed, it's cheap to add them to your plan. But there's a pretty hefty like premium you have to pay if you're trying to add a spouse that has a different job, because they, just like we talked about earlier, your company's paying a lot to give you benefits. They don't want to pay for someone else's employee to give them benefits, right? Which is why companies charge that extra surcharge or fee. But one thing to consider is like where you put your kids and like on whose plan. So if you're both employed and you both have medical plan options, I know me and my husband have swapped, like kind of changed some things up over the years to optimize that situation, to say like, I'm personally on a high deductible plan because I don't have a lot of like chronic conditions or expensive things, barring, something unforeseen or an emergency. Kids have, stuff happens. They break their arms. They do crazy things. They need to go to the doctor more often. And so we put our kids all together on my husband's plan because he needed kind of stronger insurance, just based on some different things. And so you put like everybody who wants that kind of insurance on one plan and everybody who can swing a high deductible plan on a different plan. And you kind of get the best of both worlds. And so you can be very thoughtful about kind of how you split that up, or very strategic if you think through everybody's needs.
Because some companies will pay more of a benefit towards your health insurance than others. And so if you have a spouse who has a plan and the company is providing, double the the cost offset of your company, then you might be able to find a very low deductible, lower premium plan that really is a better deal versus the one you're offered. But you need to be able to understand those four mechanisms: the premium, the deductible, the coinsurance, the out-of-pocket maximum, in order to make that decision. So additionally, when you are choosing your plan, you should check if your providers are in-network or out-of-network. This is kind of a big one, because even though a doctor might be with Blue Cross, for example, they may not be on all of those plans. And so if you switch companies and you definitely want to keep your primary care physician or your allergist or whatever doctor that you are really attached to and require, definitely go do the search tool, which all of these websites will have, and make sure that that's going to be covered. Because the last thing you want to do is get on a plan and then start paying out-of-network costs for all this sort of stuff, because then it just kind of negates the whole idea of having one of these insurance plans. You'll just pay exorbitant fees.
So in addition to making sure that your doctors are covered and they're in the right network, really spend time as best you can forecasting out your needs. It's really like the best thing you can spend some time doing, right? Is, like Mike just said, make sure that the doctors that you enjoy going to and that you've been seeing, or your pediatrician or your kid's favorite dentist or whatever, are in the plans that you want, and or decide if that's important to you, or if you're willing to, there might be certain doctors where you're like, I'm willing to switch. It is just so worth it to spend a little bit of time like forecasting out, like, what do you believe will happen next year? I think I typically, would, and I'm making this up, but like, I'd say, you know what? I've got 3 kids. I expect that they're each going to end up having sick visits 3 times a year to the doctor. And so that would be, how much in copays on this plan versus on this plan that has a cheaper copay. And so just sort of like map it out. Say, I think I'm going to end up going to the doctor twice. They're going to end up going to the doctor 3 times. And maybe there'll be, this much in prescriptions we'll need, or somebody will have a cavity, or, whatever it is across kind of dental, vision, and medical. And just do your best to map that out. And the other thing that people don't realize you can very easily do is call your doctors and ask what things cost. So we talked about this when we were talking about planning for FSAs, of understanding like how much you may have in medical expenses. And, it's very easy. I moved to a high deductible plan a few years ago, and I had this one specialty type of doctor that I had to see once or twice a year. And I was like, ooh, that's going to be expensive. I need the platinum insurance because of this condition. And I called the doctor and was like, hey, if I didn't have insurance, like, what would this visit cost me? And they were like, oh, like $250. And I was like, oh, why am I paying like, $3,000 in premiums a year that I don't need for this thing that at worst case out of pocket, if I had to go twice a year, would cost me $500, which I would save in a few months of this, lower premium. And so, just plan ahead, like think ahead, forecast out. And again, your forecast isn't perfect. You're making a rough estimate of what you think could happen based on the needs of you and your family. And then you're taking a chance, right? And you, like a lot of things, it might work out where you do a high deductible plan and it's awesome for you for 3 years. And then you have some big expense hit you in 4 years, in the 4th year. But that's fine. You saved all that money in those 3 years to help cover that 4th year. So I think that's just a big piece I'd focus on.
And when you're doing your best to forecast these costs, going back to my story about creating this model with the actuary, we were building something that would allow people to choose from a bunch of different plans and input a bunch of different variables. That is very complicated, but it is not complicated to do what you said, where you just sum up expected costs and say, will I hit my deductible? After I hit that deductible, how much is going to be covered? You can figure out that math pretty easily, and I would encourage everybody to at least try doing that. One additional thing to keep in mind about high deductible plans, going back to our HSA and FSA episode, only high deductible plans qualify for the health savings account. So if you were intrigued by the benefits of that plan and you want to sign up for it, you have to choose a high deductible plan.
Like I said in that episode, which was number 59, the benefits of being able to have a health savings account, which you can only have with high deductible plans, are so positive. They're kind of like the tipping point. If you're on the fence about a high deductible plan, that HSA benefit is really strong. And to me, would be the thing that would like tip you over to doing that versus a traditional plan. That's a personal opinion, to be clear. So We should caveat all of this with, this is our opinion and our advice. And you should certainly think about what makes the most sense for you and your family and the risk you're willing to tolerate and all of that. One final tip here, Mike. I think I've talked about this on some other episode. I don't remember what, but one thing I learned about blended families that's a helpful tip that has saved us a lot of money. This is the first year we've done it, is if you have stepchildren in your marriage, they don't have to be on their birth parents' insurance. And so it is very easy to get your stepchild covered by either parent in one of the households that they live in. And so, for example, my daughter is now on my husband's plan with his biological children. And so he was able to put all three of them on that plan. And the reason that saves so much money is that most plans don't charge you per child. They charge you like a family rate, which I always thought was crazy. I used to joke that I was like, well, insurance just gets cheaper and cheaper the more kids you have. It's like you can have 6 kids and you pay the same premium as somebody with, 1 kid or 2 kids. So one of the many reasons you should have 6 kids. But anyways, right. My point is a great way to save money is if you're in a blended family, get everybody on one plan. Because again, you're paying the same. He was paying the same premium, whether he had 1 kid on there, 2 kids, or now 3 kids. And we were basically double paying for kids in our plans, which was, we didn't even realize it until recently. And all we had to do was provide a very simple piece of paperwork. I think like a marriage certificate, maybe something really simple to the insurance company to just prove that we all lived in the same household.
So this has been a ton of information. And just to reiterate one of our initial points, we cannot choose a plan for you. These are just too diverse and too complex to do that. But if you understand how they work and you know what to look for, you can typically find the best solution for you. Regardless, though, insurance is expensive, and over your lifetime, you will get a lot less in benefits than you pay out to have that coverage. So whatever you choose, don't sweat it too much. Do your best to find something that's cost effective and right for your life, but don't beat yourself up too much about it. If you want to choose the platinum plan because you're worth it, go for it.
Yeah. And a lot of times companies' plans don't change a lot year over year. They sometimes can, but like if it sounds daunting to put a little bit of time and research into it, it's not stuff you have to redo every year.
Yeah,
often you can just sort of like dust it off and make sure it's still applicable, which is similar to many financial components of your life that, if you put the time in up front, then you just kind of keep an eye on it from year to year.
Yeah.
Hey, Mike, by the way, I love when you say it's a great point to me because I just feel very validated.
Oh.
I'm like, oh, Mike, this is like Mike's topic that he's, very well educated on. And, and I'm like, you thought something I said was smart.
You say a lot of smart stuff,
like,
Maggie. Well, sometimes I am being nice, but in most cases, you do bring up an additional unique perspective in ways that I don't think about these things because I have a very analytical view based on a long history of thinking that way. And so this is why I think we make a good team, because you talk to people in a different way than I do.
We make a great team. And right before this episode, I was joking that I hadn't read the show notes in detail. And I was like, but that's fine. And then you were like, yeah, you're just going to talk about your feelings about medical insurance anyways. I was like, exactly.
All right.
Okay.
3 key takeaways. Number 1, treat all your insurance the same way by selecting only what you need based on your lifestyle and the likelihood of events. You want to protect yourself against the catastrophes, not the ordinary and small expenses.
Exactly. Number 2, in most cases, if you are relatively healthy, a high deductible, low premium plan will be the most cost-effective solution for you over time. It may not be in 1 year, but it will be over, a course of, a number of years.
And number 3, you still need to do your research. Even if you're sure I'm healthy, I'm going to choose the lowest deductible plan, you should research the plans that are being offered to you. There are nuances that every single insurance provider and company offer, and you need to make sure that you are making the right decision for yourself. Read the fine print. If you don't love reading fine print, just get through it.
Email it to Mike and he'll read the fine print for you because he
you.
loves reading fine print. Okay. Mike's Minute on the Mic. We'll do a quick one.
Sure, let's do it.
Mike's Minute on the Mic. This is where I ask Mike a question. He has 60 seconds to answer it. So Mike, you there?
I'm here. I'm ready.
Okay. Your kids have been leaving the house every day for the past couple weeks, going back to a place that helps them with their virtual school daycare / I don't know what you call it, but they're leaving the house again, which they hadn't for many, many months.
Yes.
What's your favorite part of that?
Ooh, I can only pick one.
And then pit the top 3 things you've been appreciating and enjoying since they've been leaving during the day.
The first one is having uninterrupted work time.
I'm so jealous. Keep going.
Because whether I'm on a call or working on a project or writing an email, if I don't have somebody coming in and wanting to sit on my lap every 15 minutes, that really helps me focus.
Britta doesn't come in during the day and want to sit on your lap now?
No, she doesn't.
Separate topic. Yeah. Never mind.
My ability to squeeze in a 10-minute nap if I need one in the middle of the day, which is really nice.
Nice.
I don't think my boss would mind if I say that on the air. I think she'll
it's
be
only
okay.
10 minutes.
It's only 10 minutes.
Like 2 hours.
I'm not missing too much work.
Yeah.
And number 3 is it really makes me appreciate them more again. So, and here's what I mean by that. I loved being home with them all the time for many months, but in like a different way. It was like an exhausting, great parenting experience. But when they leave and then come back, it's a different type of joy I feel when I see them again, if that makes sense. I think parents will understand.
I know exactly what you mean. I didn't even think about that, but I used to enjoy picking up my kids from school. Like after a long day at work, it would make me really happy to see them after school. And I didn't even think about the fact that I don't have that experience anymore. Like they don't ever leave me. So I never get to be excited when they come back, And so, or they don't leave on a consistent basis. But I like that. That's nice. I like the honesty too of like, look, it's been a crazy experience of everybody working at home with their kids. So it's nice when people have a setup where they're going back to some other place to educate them besides 12 feet away from where you're trying to make a living.
Right. Or 2 feet away.
Or 2 feet away. I love when we're on calls and like Mia pops in and, in her leotard or bathing suit.
Oh, yeah. Sure, everybody loves that. She likes to crash all kinds of meetings.
It's a good discussion. I hope people found it helpful.
So if you've been challenged or inspired by what you've heard, please rate and review the show. Please provide us your feedback. If you feel differently about medical plans or you have some additional advice you'd like to share, please reach out to us. You can share your thoughts or questions by leaving us a voicemail or texting us at 404-981-3370 or hit us up on Instagram or Facebook.
Awesome. Great discussion, Mike. Thank you so much. And I'll see you later.
All right. Thanks, Maggie. Bye.
Bye.